Mr.Alpaca, Fundamentals in 5 minutes. Since its IPO in August 2020, Corsair's stock price rose from $17 to $51 before it plummeted to a range of $27 to $35. Its largest shareholder, Eagle Tree Capital, has reduced its holding from 90% to less than 60%. Meanwhile, the expectation of monetary policy tightening and shift to outdoor activities in a post-pandemic era have kept the stock price under pressure. So, is this company a good investment? Corsair was established in 1994 in California. By the second quarter of 2021, it has more than 2,000 employees, 23 main product lines, including gaming components, systems, and gamer creator peripherals. In the past 4 years, the company's sales revenue has grown at a compound annual rate of 25.7%. The fast-growing esports, combined with pandemic tailwind, helped Corsair accelerate its expansion and achieve record-breaking growth. In terms of market share, Corsair stands at the first place for memory, power supply, and cooling solutions. Second place in keyboards, cases, controllers, and streaming peripherals. Corsair targets gaming enthusiasts who have a higher demand for performance, appearance, latency, etc., and are less sensitive with price. Therefore, the products could sell at a premium. Corsair is the pioneer in RGB components, which could be controlled by IQ Light control software. The synchronized lighting allows players to have an immersive experience. Since IQ system works only with Corsair components, gamers tend to buy a complete set of their products, forming a great ecosystem. In the past 3 years, Corsair has acquired Scarf, creator of professional gaming controllers, Elgato, a provider of gaming and streaming peripherals, Origin PC, an online retailer for customized PC, and Game Sensei, an online esports coaching platform. These acquisitions have created great synergy to help boost future revenue. According to earnings release of Q2 2021, revenue has grown by 18% for gaming components and systems, and 41% for gamer and creator peripherals. This helps improve the company's overall profit, as peripherals have a higher margin. Management have maintained their annual guidance, which shows that they are very confident with this target. Despite all this, the share price never recovered its February high. One major concern is investors worry that as people gradually return to outdoor activities, companies like Corsair would lose their tailwind. Corsair CFO Michael Porter has replied in an interview. Pandemic has not just released the demand for committed players. Instead, some casual players have become committed players. Gaming and streaming growth is irreversible. Gamers still have to upgrade their gears, even though they may have less time to play. It's difficult for players to cut their expenses once they get used to quality gears. Corsair keeps launching new products, such as microphone and camera, etc. Corsair CEO Andy Poe has commented in the Q&A section that there are currently 2 headwinds for Corsair. Higher logistic cost has dragged down product's margin. Chips and graphic card shortage have made some players to delay their plan for gear upgrade. The situation is expected to improve in the post-pandemic era. A risk that cannot be ignored for Corsair is the rapid growth of the cloud gaming. Cloud gaming is a type of online gaming that runs video games on remote servers and streams them directly to a user's device. Since video games are rendered on a cloud, high-end PC will no longer be necessary locally. This will have a negative impact on its business of cooling solutions, power supply, memory, etc., but will boost the sales for mouse, keyboards, controllers, etc. At this stage, due to internet speed and latency, game enthusiasts cannot fully embrace cloud gaming, but investors should pay close attention to the development of this industry. Based on current stock price, Corsair has a market cap of $2.6 billion, forward PE at 14.5, PS ratio at 1.28, far less than Logitech at market cap of $17.8 billion, forward PE at 22, and PS ratio 3.08. However, Logitech has a more impressive growth rate. Therefore, Corsair should expand their product lines through innovation or merger and acquisition. Overall, Corsair is a company with lots of potential. Especially for a new IPO, management would usually set an achievable target for an easy bid. It is also common for venture capital to gradually take profit and reduce holdings after the company listing. This is not necessarily a bearish sentiment from the insider. It could well be that the institution has other investment targets with more potential. Besides, EagleTree is still the largest shareholder after the cut. From another perspective, the selling has helped squeeze out short-term speculators. This leaves Corsair with investors who truly understand the business. That's why the stock price has strong support near $25. Don't be surprised if the share price breaks out by the end of 2020, as Corsair usually have a stronger second half compared with the first half of the year.